Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you. Today is December 17th, Thursday. Mark, great to see you in the room. Kyle, Pete, Permendra, Tim, good to see you guys here today. So I hope some of you caught some of that volatility yesterday. It was a fun day for sure. We got the 25 basis point hike that we had expected, and it came along with a more neutral to dovish kind of tone with the policy statement. Obviously, you see downward revisions across the board as far as where the committee expects inflation to be, which was kind of interesting, how they reduced their inflation target yet at the same time lifting rates. It was a very, let's just say Yellen's on the right path here. Markets took it pretty well. You're seeing broad equity market gains here today. Relative performance on the dollar stronger against most of its major counterparts. There were some trades that we jumped into yesterday from scalps that worked out. Some didn't. We'll jump into those. And the only ones that we've been focused on, guys, ever since FOMC has been Euro, Dollar CAD, Aussie, Dollar Yen. I know that Jamie's also been looking at the Swissy, which we looked at yesterday. So we'll go over those. As always, feel free to throw out any questions or trade setups that you have on the message board. All right. So let's get started. Today, relative performance so far on this session, you can see that the dollar is stronger against all its major counterparts. Biggest loser, interestingly enough, is the Kiwi down 0.87%. Swissy and Aussie are both down, and Euro for that part, about 0.7 of a percentage point as well. Dollar index, the first resistance range that we talked about, 12,123. Although we pushed into the 618, we closed right below that. Okay, and here's a secondary push clearing it. So if we clear this region today, you're looking for continuation. You're looking for 12,193, which is, again, the high day close for the year, followed very closely by the actual high close, and that's 12,204. Okay, here's what the dollar looks like on the intraday charts, guys. So the 30-minute chart, the scalp that we were following yesterday, both of those resistance regions gave out. Here's FOMC, okay? It's very, very telling that the drop found support right at the weekly open, confluence with that lower median line parallel. So remember, we weren't really sure that we were going to work with this proposed parallel. You didn't have enough, quite enough tags to verify it. This right here, coming in support, finding support on the rally, top side, nice confluence region with the 764 retracement. Near-term resistance. So it seems to be following this glide path pretty well so far on the near term. Again, this is going to be a break of that descending ML formation. Okay, so if that's going to be the break, you'd look to play back into former support here. And again, that takes you into like 12,146. Oh, excuse me, I was looking at the wrong tag. 12,193. Yep, right here. At this point, we're going to raise the bullish invalidation level from that 12,096 mark to right here. So the same breakout level that we saw yesterday, 12,131. There's that 123, which was, again, the high day close for way back here in April. Same level. Oops. And that's going to be the near-term bullish invalidation level. You're getting some divergence into these highs. We noted that, but still not something you want to necessarily press aggressively here today. You went around the globe, and all things held constant, the dollar remained pretty supported on the FOMC move. Permendra, great to see you in the room, sir. Mark says only thing that is interesting is dollar yen. We'll take a look at dollar yen as well. It's on the notes here. So we were in some dollar yen scalps yesterday. We'll go over that as well. Any questions on the dollar index, on where we stand right now, or any key levels that you're looking for? Again, not necessarily a tradable asset for us here stateside, but can be very telling. Also note that on the daily chart, you are testing a pivot, or a break of this resistance trigger that dates back to the highs we made in November. All right, moving right along to yesterday's update. So here's the euro dollar. Objectively, made a break of the weekly opening range, shifting the targets, shifting your focus to the downside targets at 108.55. 108.51 was the first target. Next target is 107.87. We're kind of dilly-dallying here. We haven't made it quite that far, but this is a pretty nice near-term confluence. You have 100% extension from the decline off the highs, a 38.2 from the ascent off the lows. Both of those converge with basic parallel support. So we're looking for a break below that to give us the downside signals. On the euro dollar yesterday, I wish I had the charts could show previous price action, but I got my, I'll say it in a more PC way, I got my rear end handed to me on this one yesterday, trying to play the long euro trade on the back of FOMC. And point in fact, guys, is that it would have played out perfectly, only my timing was off. So the long entry was made a couple of minutes after the release. You saw euro tank. It tanked right into that key support structure at 108.89, 108.95. And right off that region, on the way up, couldn't catch it fast enough, jumped into a long position. It whipsawed and took me right out again. On the second time, again here, there was another opportunity to try it. Didn't take it, thank God, because it finally broke to the downside. So we ended up with a net loss of 27 pips on euro on a couple of different scalps. There were 2 scalps that got stopped out. Didn't work very nice. What did work really well, in fact, was a dollar CAD short, as odd as that seems. If we take a look at dollar CAD, and let's bring you to the charts here. First start off with the dailies to show you. Big region of resistance. I don't really have any targets to the upside beyond this, but just to show you how we played this yesterday. Here was the FOMC announcement. Excuse me. On this rally for the FOMC, this thing ripped into 138.45. Okay, that's not a level. That wasn't a level yesterday. It's just a basic high that we hit, guys. So there wasn't necessarily a key resistance level there, but you saw a break of this early in the session on oil inventories. This is before the Fed. So it made a high ahead of the Fed, came back down to support. On the Fed release, it spiked just shy of those highs. So a great entry for a short position. A trigger came just a couple of minutes later on the 5-minute chart. Okay, really nice secondary push right here, coming short. And again, this is oil inventories, so we couldn't even max out the highs on FOMC. So it was a really good opportunity to try pressing a short. Resistance held at 16 momentum, and we got out 2 entries. First one was 30 pips. You're looking for 27 pips per scalp, and the second one was right dead on at 62 pips. So it played out perfectly. And again, keeping in mind the focus of our strategy is near term. So if I would have gotten greedy on this trade and said, hey, I'm going to look to play this, this is probably the dollar CAD reversal everyone's looking for, trying to get all cute, high tipping it or high ticking it, you would have gotten smoked because just next 30 minutes it came back and took the whole thing. So that was a really nice nimble-footed scalp that worked out for us yesterday on dollar CAD, and just goes to show you that although this is not the way you want to trade, generally speaking, just goes to show you that the strategy allows us to, even on days when the broader bias is to the upside, to be able to play these intraday moves. Now, the ideal scenario on this was once we finished off that short, we broke back higher to the downside here to get back on the longs, but there wasn't any triggers even to the open of Tokyo last night. So I didn't get into anything dollar CAD since then. Here we are right back at the oil inventory highs. We're already above the FOMC high. So watch for continuation on this kind of trade, guys. I really don't look to scalp it too aggressively when there's not much clarity in the daily chart. I really don't have anything on the top side targets here until like that median line, which today comes in somewhere around 138.90. Soft target at the 140 handle, and then this is the next big range at 142. So we've had quite a stretch. In fact, if we take a look at the consecutive bars indicator, just take a look at how many days. Okay, so it didn't count this as an up day. All right, that's not going to tell us much. Long story short, we're in overbought condition. The propensity for the market to keep pushing here is there. Not going to try to fight it personally myself at these levels. Questions on dollar CAD? Those fib levels seem to align pretty well, dollar CAD. Yeah, I mean, the only problem is that I keep stretching the fib to the next high. I don't like doing that, Mark, because you have no way of validating this is a high. So just for the sake of analysis, when the market does turn over, I want to have the levels ready. So every day you come in and you stretch the fib to the next high, it's not really, the way you want to use it. That being said, it's just not something I'm going to try to fight. We'll need a little bit more verification or conviction that this thing is really turning over. Other than that, it's simply an uptrend, guys. I just find it interesting that we can't even peak the oil inventory highs, not even on FOMC and not even on a day like today where the dollar is ripping against all of its major counterparts. We still can't even test those oil inventory highs. Add to that, excuse me, if we take a look at what crude is doing, right? Well, that kind of turned over to the downside again. Came into resistance. We talked about this here in the webinar yesterday. Here's the basic sliding parallel of the same slope. We came right into that and held, and we pushed lower. Again, testing that key near-term support at 34.85, 1618 extension off the highs. So crude is coming into support, for dollar CAD. Still have some room to the upside before we run into anything structurally. So we'll be on the lookout for that. But from the scalping basis, definitely the FOMC offered some really nice. This was my best performer on the FOMC release. The other one I was involved in was dollar CAD, and that also we were scalping to the short side. Listen, at the end of the day, guys, we got the exact reaction that we had talked about here in the webinar. The initial reaction saw the dollar surge. Then you saw a real stern sell-off. And then after the market kind of digested everything, the dollar rally continued on. And as we said before, and this is a very key point I want to touch on, and a lot of people were, obviously it was a big release, but these fundamental announcements, data, yada, yada, very rarely have the propensity to reverse a trend, right? If anything, it can cause an interruption. It can spark or fuel a break of resistance and continuation, but very rarely you're going to see something like this change the technicals, which is why that's what guides our price action. That's what guides our trading. At the end of the day, even though the market was pricing it in, they came out a little bit more dovish. The uptrend still continued. So as far as the dollar yen was concerned, why we tried to fight that was simply because of the reaction and how it played out. Remember this slope we were looking at yesterday? Remember that key 618 at 122.26 we were talking about yesterday? Well, here was the FOMC release. Okay, and you saw this thing rip right into that 618, come off. It was a really quick trigger. We were just outside 24 pips for the stop. I think it was 27 was what I had to max it out at. And we grabbed a quick 20 on the way down. Stops to break even, took half the trade off, and then on the way up, we got out with like a 6-pip profit. So we took 22 pips on the half of the position and 6 pips on the other half. So it was an all right day. The euro scalp, again, although the euro would have been the best entry at the end of the day because the direction of our scalp was at a really, really good entry. I mean, a really good position. If we had a little bit more quicker fingers, we would have been 3 for 3 on that. But those are the 3 trades that we were involved in most. Let me go back to the dollar yen real quick, guys. So the dollar yen, what can I say? That confluence support did hold. It wasn't the prettiest thing, but certainly you did see us break right through the 100-day, the 200-day moving average, and this region of resistance is now given out. You're now testing that 122.60 region, which is the exact opening range low for the month. Here's what it looks like on the intraday. So if you take a zoom out, a sliding parallel for that slope off the highs from, what is that, December 7th? Looks like it's giving us a hold here near term. Not to mention on the way up, you were getting some divergence. So I'm not too keen on trying to fight it just yet, but we'll reserve near term if we break back below 122.26, which is what we were looking for on that long side yesterday. I think you'd get a pullback towards the median line, back towards this 121.83, 121.90 level. A break higher, 122.79 and 122. I think it's going to be 123.46, the highs. So looking for possible dollar-yen resistance here, heading into the open. Again, we'll be looking for short triggers. You have a trigger that dates all the way back to this low that we made in momentum. Don't like really using these divergent signal lows, but even if you take it off the actual low in price, it's the same slope. So if we break lower off that and we make a move sub 122.26, you look to play a near-term recovery, but longer term, you're testing near-term downtrend resistance. Any questions on dollar yen? Hey, Amir, I'll get you both those questions. Well, the dollar CAD we just went over, right? So he's saying, would you short dollar CAD at 38.20? So 38.20. No, why would I short it down there? On 38.20. I'm not sure if maybe I'm reading your question wrong. We have to have a trigger in price, Amir. He says, I missed this partner. No, sorry. No worries. No worries. We have to have a trigger in price, right? We have to know what kind of strategy we're working with. For me, it's more of a momentum based as well as looking for reactions off our levels. On a trade like this, where the daily chart is an overbought condition, remember, anyone who's telling you that you should sell an overbought condition because it's an overbought condition, just throw that notion out the window. Okay? It's the cross back below 70. That's the actual trigger. As long as this condition holds, the market can continue to push higher. And this is a very classic mistake traders make. And I'll show you an example. We've done this before on dollar CAD, or dollar yen rather. Dollar yen has had instances when it was an overbought condition for an entire month. And if you were sitting there trying to short this trade throughout the month of September of last year, would have been a rough month. Same thing again in November, right? It's an overbought. It's an overbought. It's got to come back. You're getting cut up. So you're looking at the same exact thing here on dollar CAD. I'm not going to try to fight this while it's an overbought condition. If we had a clear-cut concrete resistance, definitely would have liked to jump in. But for me, as a momentum scalper, I'm not going to jump into a position like that. Amir says, thanks. Clear. Thanks, mate. You're more than welcome. I know that Jamie was looking at something like that, but you got to also take into account, and Jamie's going to be a little bit wider of a scalp. I'm only looking for a quarter of the daily TR. So my limit on this is going to be a 25 pip stop. Can you try to call a high with a 25 pip accuracy? Probably not. It's going to be a tough play. Hey, Chris, great to see you, sir. It says, good morning, Mike. Do you see a FOMC short trigger on sterling? I missed entry because I didn't see one. I also tried the euro dollar long yesterday, the second one. Yeah, Chris, the euro is what kind of stung us yesterday, but we have all these setups across the board, right? So you kind of don't want to put all your eggs in one basket. Like I said, the dollar CAD and dollar yen came in to save the day, specifically dollar CAD. And every time I tell someone I had a short scalp on dollar CAD yesterday and made money, they were laughing because they come in today and dollar CAD is still ripping higher. Oil is right back at the lows. But that's the beauty of our strategy. So for the British pound, let's go right into the update from yesterday. Here's what sterling looked like yesterday. Whoop. And here's what British pound looks like right now. So the low day close was the focus, and the bullish invalidation level, 149.49, low day close for the month. And we didn't close there yesterday, but a quick break here earlier today. Interesting for me is that you got good data or decent data out of the UK. Retail sales smoked estimates. They were looking for a print of 0.5%. It came in 1.7. Okay, the year on year, we're looking for 3% printed at 5%. So really strong numbers, and even some downward revisions to the previous print from October. Retail sales for the UK were just strong. You're still not seeing this give a break here for the pound. Here's what the intraday chart looks like more importantly. So on FOMC yesterday, very similar scenario. Here's what the update looked like last night. Similar scenario in that the FOMC went for a probe right back through the ML and it failed. Okay, and it pulled right lower. This would have been a great scalp, guys. On the short side, it was more, I think, in my opinion, more clear actually than some of the other trades that we were looking at. The only thing you got to keep in mind, the holding costs of the pound is a little bit more expensive. So if you're heavily leveraged on these trades, you want to use some caution. That being said, it took out, or we're still looking for this key support where it's pushing through right now. You're right. There hasn't been many triggers on this, Chris. The only trigger that came was basically yesterday's FOMC. When this thing would have, let me just draw it for you, would have been watching something like this. And then you had the FOMC spike come into resistance, hold. Remember, this is the weekly opening range. We saw the weekly opening range break. Objectively, you're bearish sub the weekly opening range low. So the tell on this one was when it rallied and when it ripped, it failed ahead of the opening range low. Momentum failed ahead of 60. That's a tell. That's a clear tell. So downside targets at 146, 149.67, 149.49. I know it's a bigger range, but these are both pretty decent levels to look at, this being the low day close again for the month. Now, at this point, we've made it below the lower median line parallel. And we're going to go ahead and drop our bearish invalidation level from 150.66. We're going to go ahead and drop that down to 150.25. And that's going to coincide with not only the lower median line parallel, but that key 618 retracement of the advance. Near-term support targets, 48.94 is the stretch low. More importantly, this critical range. You have a huge confluence of 100% extension, 786 retracement, and a 1618 extension, all between 48.50 essentially and 48.65. It's a big region right there for the sterling near term. There's the confluence again here on the daily. 618 off the yearly high, and a 786 off the yearly low. And again, the bearish invalidation lowered to 50.25. So if we max through this again, you're gonna want to throw out that short side bias. Keep in mind, objectively, again, not what Mike says, just broader objectivity. You break the opening range, you look for a Thursday, Friday high or a Thursday, Friday low. So we broke to the downside, looking for a low here. Could happen today, could happen tomorrow, but I'm very interested in what's going to happen as a reaction in this key zone. Questions on the sterling. Chris says, when trying this one real time, I fell short of level. I was looking, okay, I'm sorry, I'm reading this wrong. It fell short of a level I was looking to short, and the trigger came with a stop that would have been 30 pips. I didn't see a better setup. I'm just trying to learn. You're talking about the pound, Chris? Yes, he says. Okay, so as I was saying yesterday, or I was saying earlier today, even on that dollar CAD trade that I took, the second entry on it, it was pushing the limits of what our ATR objective is. And although, again, guys, I really can't advocate that you guys break the rules, quote unquote, for our strategy. But the only thing you keep in mind is that when you're going to an event risk like this, the market's going to be whipsaw. And I saw that yesterday too. No matter how many years I've been doing this, sometimes even if you give yourself a little bit more cushion on a release like this, that euro long would have been a beautiful play, but we got stopped out of it. right? A lot of times you need to open up your cushion just a little bit to let the market give you some volatility before getting stopped out. So guys, let's just put it on the table right now. Event risk trading is a high risk maneuver. Period. End of conversation. The best type of trades for event risk are when you're in the position and the event risk either charges a continuation, so you're even more in the money, or if it doubles back, it'll take you out of a position you're already in. Trying to scalp an event risk is one of the hardest things to do in trading, hands down. So I just want to throw that out there first, Chris. But secondly, on a trade like the sterling, yeah, the triggers weren't as clear. After that one trigger that gave out, which you're right, it would have been a very stretched ATR. There weren't many since in overnight trade, at least. Does that make sense, Chris? He says, I'm just trying to learn, and I'm trying to help you, Chris. Just want to make sure we're on the same page there. And diversify your trades too, essentially, especially if you're coming into an event risk, guys, and we have 3 or 4 setups on the table, which we did. We had, what were the setups for FOMC? Sterling, Euro, CAD, Yen, and Aussie. Pick and choose. If one of them is not working and the trigger is not working, we had to shift over. Like I said, for us yesterday, for me personally, I was in Euro, CAD, and Yen. So again, not putting all our eggs in one basket. Chris says, I'm good. Just use these moments as opportunity to improve technique. And that's the name of the game, man. Always learning. Almost 11 years in, I'm still learning. All right. So that is the British pound from yesterday. Still looking at this zone here. Now that we've made it out the underbelly, I'm looking for a near-term target of 48.93 and that key 48.50, 48.65 zone. Last but not least, from yesterday was the Aussie dollar. A little disappointing as far as the reaction because you didn't get a break of that key zone. So we held support, key support at 71.16, 71.77. We talked about that. 100-day moving average is right there at the lows as well. Resistance, 72.81. Basic trendline resistance. Former median line support, right? All we did was play ping pong between this region. Momentum still hasn't given us the break of that multi-month support trigger. So Aussie dollar in a very key range. The levels are well defined. You're more than welcome to play inside the range, but trying to play the breakout before it happens, in my opinion, again, not a style I'm going to be looking at. Here's a basic trendline resistance, nothing fancy. Right off the highs. We had a short that we took earlier in the week, if you guys remember from this, I think it was Monday's scalp. We closed that out way too early before we got into that support. But at the end of the day, look where FOMC ended up. We couldn't even get through or test the weekly opening range high. That's a tell. That's a tell. Momentum did come ahead of 60, but it was backed very closely by a quick trigger support break. So on a trade like this, and the reason I didn't take this is because by the time I looked at Aussie dollar, we were way off the highs, right? The best entry for this one would have been right here on the subsequent break and failure. Stop against the high, looking for about 21 pips. You got more than that on the way down. In Aussie dollar, is there a 618 retracement that is supported by the trend line? Comes later tonight. Here? Oh, he says, no, there is a 618, right. So the 618 of the previous session's range is right here at 62.35. That's still the level that we're looking at. And overnight, you're right, that does coincide with the basic trendline resistance. You're saying from the FOMC highs, you can do that as well. So for me, I'll typically continue to work with the same retracement as long as we're within that range. So you still didn't beat that high. You still didn't make it out that low. So I'm more inclined to stick with this retracement. But you can also definitely look at this retracement, Chris. And you'll see that the 618 is pretty close. Okay, it's pretty close. Does that make sense? So either way you're looking at it, 72.35, 72.34 is a nice confluence region with that trendline resistance in overnight trade. So that's going to be our near-term, that's going to be our near-term bearish invalidation. You're sitting at support. You basically need to make it through that 618 at 71.56. In such a scenario, you'd be looking to hit that 100% extension at 71.20, and a broader date, a longer date at 786, down just below 71. He says, yes, the same basic setup exists on the sterling and the euro in the same time frame. Very similar, very similar. I think euro is a little bit different in that it made a clear-cut break of the weekly opening range, right? Aussie did not. Aussie, here's your Aussie open. You made a high, you made a low. You're still in that range. A little bit different. Does that make sense, Chris? British pound, same thing. I think the British is more like the euro as well, in that this has made a clear-cut break of the weekly opening range. So the bias is already there, looking for a Thursday, Friday low in both sterling and euro. He says, for sure, sterling and euro, much more bearish. Yeah, I think the signal is a little bit clearer on those. Any questions on any of the dollar crosses before we go into some of the exotics? Avery says, hi, Mike. You mentioned you're looking to short sterling. Does that mean you're only looking to go long dollar? A long Aussie dollar off 618 fib will be off limits. Thanks. Off this fib? Here's the thing, Avery. Here's the thing. I don't want to staple I'm long dollar, period. I don't care, right? I don't want to make an assumption like that because we want to take every trade on its own merits. So here's what I can say to you, Avery. If this comes into the 618, momentum holds 60, and then we see like a trigger break for a 21 pip scalp, sure, I'll take that. Because remember, we haven't broken the opening range here yet for the week. So we could come right back into this trendline resistance, come back down, come back into this trendline resistance. There's no reason not to play those if I have clear-cut triggers, if I have clear-cut directional bias. I'll be playing those at half leverage because it is counter trend to the broader downtrend that we're in, right? But that's different from trying to say, am I going to go long the British pound? Well, this is broken to the downside. This would be counter trend already, even for the weekly bias, and momentum is still pretty bearish. So what would make me buy a sterling dip? Well, I'd want to see a break above 60, a pullback hold at 40, and then a trigger. So I'd want to give a little bit more room for this thing to bottom out before I start trying to play the longs. More so on this one, if it gets into a nice rally, you'd more so want to look for the short triggers because the bias is already there. Does that make sense? Avery says, okay, each trade on its own merit, thanks. Right on. And Avery, we never want to lose focus on what the broader trend is saying. It's extremely important that you always know, what the daily chart, where you are in trend. It can stop you from really making a mess of things sometimes. So I hope that helps, Avery. Let me know if that makes sense. Mark says, did we just miss a dollar CAD short trigger? It's not the best looking trigger, but yeah, it does look like something's going on here. Let me bring this to a 1 minute real quick. Yeah, we did miss the trigger on this one. Although you're not that far off yet. See if you can get another snapback here into the US Open. But just keep in mind, again, anything that you take on a trade like this, we want to be nimble because it isn't an uptrend. We don't have any clear-cut resistance. The only line you're looking at here, guys, it's not a measured move. This is just the fib level. In fact, I should probably just get rid of that 0 so no one gets faked out. Okay? So I don't really have concrete resistance up here, Mark, which is the only issue I have with that trying to fade a move like that. Basic support on this trade comes in at 37.60. Okay, that's a basic trendline support. And also a 1618 extension. We talked about that on the daily chart. And then that sliding parallel also comes right into that region. It's pretty clear as where, at least where you'd look for an initial support break to get the pullback on this one. But I wouldn't be comfortable just trying to jump in from here. Mark says iffy, right? All right. Okay, so if there are no other questions on the dollar crosses, he says sorry for the interruption. LOL, no worries, no worries. If there are no other questions on the dollar crosses, I want to jump into some of the notes I had last night for you guys. Euro we got, Aussie we got. Euro dollar bearish invalidation now 110.10. I'm not sure if I told you that. So here's the euro dollar daily or 30-minute. So the break, there was that first target that we hit. We're sort of just straddling that right now. At this point, we want to drop the bullish or the bearish invalidation level from this high. I want to drop that right now to here, near term. So if we break back through 108.95, basically the 109 handle, which was the objective weekly opening range low, you'd invalidate that bias. In such a scenario, you'd look for a run back towards that upper basic trendline resistance, basically. Okay, let's move on. Some of the crosses that were very interesting yesterday that didn't give us much volatility, but have put them in a primed area. Well, let's go over some of the range plays we're looking at, though. Kiwi Dollar first looks like this. Here's what the opening range looks like for the week, guys. It's just been textbook. Here's a Monday, Tuesday stretch. FOMC gives you a stretch into the high. It holds. Looks for a test of the low of the week. Couldn't even get there and holds. Very well-defined range. You look for a break. Let me snap these lines to give you some clarity on this one. Since the weekly open, you've just made a high, haven't even tested the lows, and you're holding here. So dollar CAD on the daily, you can see that we're holding that range right between some key levels. This right here is the actual November open, and to the upside is 786 at 67.96. This is the range we're looking for the break. Within the confines of this uptrend, we did tag resistance. So if we do break to the downside, you'd look for a pullback into basic trendline support. The reason I kind of feel like I want to see this break lower is because look at the momentum signature. True, we did hold 40 last month before rebounding, but on this last rally, 60 hold almost to the pip, right? And here's another 60 hold that we made yesterday in momentum. So if this trigger breaks to the downside, we get a downside break of the range, you should have a decent play. First this basic trend line, and then to form a resistance. And that takes you like 66.27 or so. A little bit more than 100 pips. At that point, guys, we would just tack on a quick retracement. Just for argument's sake, if that was the high yesterday, you see where the 50 comes in and 618. Those would be your targets. So make or break time for the Kiwi Dollar. The other one is dollar Swiss, near term. Beautiful rebound off support. This is a 618 retracement of the entire advance off the October low. I think we talked about this. The 100-day moving average, the lower median line parallel, all came here. And to start off the week, heading into the FOMC, you had an opening range for the week right above support, your ideal plays. So the opening range looks like it broke to the upside. That happened here today with a move above 99.12. Look at this on the near-term chart. Here's the break. Very loose formation here. I'm not going to really stress this, but it seems that we're following at least the same gradient. keeps the focus weighted to the upside, at least near term, well above the 99 handle. Pretty close. So you'd want to stay constructive on this near term while above here. Whoop, didn't mean to make it that big. And a topside break of the formation, you look for that key 50%. That takes you right above 10050, 10060. Or the immediate resistance is still 99. It's still parity basically, 99.92. So pretty clear as far as the levels. Still lackluster as far as like the amount of volatility you're getting. But just be careful here because you're getting some pretty radical divergence on the longer term slope here. So if you get a pullback, I'd be much more interested in looking for possible longs off this level. Okay. I think I missed someone's question. Amir, where are you? Amir. Ah, here it is. Amir is saying, hi, Michael, what's your view on gold? It's been holding well above 1058, 1062 for a few. Is the start of a positive movement? I was looking at this yesterday. Look, it could be. It kind of took a lot of it back. We're right back at support. This is what gold looks like on the daily chart. And the fact that, let me just bring this into a close, actually. Let's just clean it up. Here's the slope that we were working with, which held until we broke. Look where we found resistance yesterday. Right there, lower slope, and then we moved off. So I'm not too keen on trying to fight the gold sell-off yet. I would be, if anything, let me just take a step back, Amir. If anything, you should take any long exposure you should take should be against this low. If this is corrective, it might have a little bit lower to go. Yeah, I mean, this is what I would just be watching. So this dotted line you see right here, I'm going to get rid of it right now, but this is the low day close so far for the year. I'm going to remove that just to keep this clean, but you can see what's grabbing the low right now, a 618 extension off the high. It's holding the lows. A break below that, yeah, 1053, 1047 would be the next cushion zone, and this is, I think, where you'd be a little bit more susceptible for a rebound. That would be just a basic ABC type simple correction if we're turning. Now, the fact that the dollar is rallying is not going to help here, Amir. We would want to see the dollar find some sort of resistance near term before getting any type of conviction on a long side play here. But you're basically trying to call lows here, Amir, not necessarily something that we want to encourage. You're at support, but with a strong dollar and from where you're coming off of, it's a hard call to try to call the low on this. I'll tell you this, guys, as long as we continue to close above 1060, it does bode well. You know, typically, if you make a low like this and you are going to rebound, typically the low day close should offer some support. So it's been kind of messy, but you know, it's a very strong downtrend. So take that for what it's worth. Amir, I hope that helps. Again, I don't have any active positions on gold, but that's what I would be looking at. On the weekly basis, he says, thanks, I was about to start building positions. Yeah, I mean, on a weekly basis, if you take a look back at this, in fact, it's funny you asked me about this because I'm actually about to write the gold forecast for daily FX for the next quarter. By the way, here's dollar CAD made a nice move to the upside, so it's a good thing we didn't jump into that one. But if you look at the gold weekly chart, this is what it looks like. You know what I mean? There's nothing here screaming at me, hey, Mike, this thing is low or it has made a low. This is what I'm looking at. And I think, Amir, we're on the same page with this. Look, you're getting some divergence into these lows. Remember, divergence can last for days or months before it actually formulates a turn. So I'm not necessarily stressing that, but I am noting it. And also, you could still possibly see another spike lower into this basic parallel support. It's just a mirror off the resistance levels that we've been working with. Same slope, comes in just lower. So you can see a scenario where this thing tries to make a new low, maybe bounces. At the end of the day, you're fighting an uphill battle here. Outside day reversal off the low keeps the focus. Let me just say this one thing, Amir. An outside day reversal off the low keeps the focus on that day's range, or on that week's range. So the range high, 1088, the range low, 1046, is the region or the zone that you need to clear. This is a bullish candle here, an outside reversal at the lows, okay? But a lot of times I like to play the trade when we get these this is essentially we'll use it as an opening range. So if I break to the upside, I'm constructive against the lows. If I break to the downside, I'm bearish against the highs. And that's how I like to use these outside day reversals. So that being said, you're kind of still within that same range. Does that make sense, Amir? He says, when should a bearish scenario be put off the table at what price? For me, that would be a break above 1098. That hasn't changed. It would be a bullish near-term break if you clear this week's range, that week of the 28th range to the upside. But for me to get constructive on it, this is kind of what I need to see. Remember, this was the low week close previous to the break. It was the exact low that you made here in September, almost the exact high that you made in early November, and right now is the median line. So that's a big, 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 big level. Above this would be constructive in my humble opinion. We good, Amir? No, he says, yeah, right on, man. He says, thanks again. More than welcome, sir. Okay, we're running low on time. I just want to jump through some of these positions that I'm looking for. So we covered on dollar Swiss. Aussie Kiwi, I just wanted to highlight where that's coming into some support. Okay, here's Aussie Key, basic trendline support off the low from April. Basic sliding parallel, resistance, resistance, support. Key resistance on this that you need to get through 107.20, 107.30. Here's what the scalp looks like. By the way, again, anyone who's new to the room, you can take a picture of any of these charts if you need them by clicking that camera in the top right-hand corner. So feel free to do that. Aussie Kiwi on the intraday looks like this. So the only thing I wanted to highlight here is that you're seeing that divergence that you were getting into the lows, okay? Momentum hasn't broken 60 yet as resistance, so you don't have conviction on a reversal, but at the same time, that trend line along the lows continuing to sort of glide this, keep that slope in focus. This is a 786 retracement of the advance, that's 106.24. You got a clear move here. Here's your Monday, Tuesday opening range. You look for either a breach above 107.30 or a break of the lows. You'd start to sell rallies. A break of the highs, you'd buy pullbacks. In the meantime, you can play inside the range. I just don't like it. I think it's a really tight ATR at 24 pips. I think we have better opportunities elsewhere, but I am going to be looking for a reaction off of that level. So it might be a play for early next week heading into the close of the year. Do keep in mind, guys, this is the last full week of trade. So just be nimble. It's not the best time of year to actually press any major new positions. For me, on a scalping basis, this is when we start to reduce our leverage a little bit because you see volume is going to start dropping off. Once volume starts dropping off, you don't have much conviction on the positions or the moves you're seeing. By the way, anyone who's trading with FXCM, you do have volume indicator now, which is very helpful. I don't have it installed here, but there it is. Oh, not available on all pairs apparently, but they do have a volume indicator available now, which gives you a little bit more of a tell. And why is volume important? It's not as important as you do see in equities market, but a lot of times it can give you a clear-cut measure of whether you want to trust the move or not. So for example, this is the volume on the daily charts. You use volume indicators like this when we'll look for a break of that previous monthly high. A high volume day like this, breaking above a median line, that's something you want to trust. And certainly that rally continued for another week or so into fresh highs. Another high volume day bar was this, suggesting that the turnover, that was the highest since the turnover from the peak, shifts the focus lower. Didn't work right away. You saw a pretty pullback here, but eventually it started to mark the beginning of the turn lower. So we haven't really gotten, yesterday's volume wasn't anywhere near that, okay? Wasn't anywhere near any of those high volume days. So it's just something to pay attention to. So each high volume day that you've gotten since has still been, something that has called a near-term turn in price. So something to pay attention to. Anyway, moving right along, us getting sidetracked here. Euro Oz, just want to take that, breaks the opening range low I wrote last night, something that we were focused on in the updates earlier this week. Remember, the basic focus was this key resistance at the 53 handle. You had a median line parallel there, 50% retracement there. Here's what it looks like on the near term. So we were just sitting. Remember, we posted this earlier in the week, just on this basic opening range above a nice support confluence. False break there earlier in the week. There's FOMC. Nice downside break. Keeps the focus lower below 51.50. So you took out the first two targets already on the rebound. Objectively, if we break through this, you're neutral, right? Because the condition that broke the opening range low puts you bearish. If you break through it, you're neutral. That being said, near term, look for some resistance at 51.50 for Euro Oz. Euro Yen is another one, straddling the weekly open. Here's what that looks like. Weekly opens in purple. We're working with this slope earlier in the week. It's kind of messy. Still looks like we're following the basic premise of it, so I'll leave it up there for now. But the only one thing I want to highlight is we're straddling the weekly open, and you have a clear-cut opening range low, opening range high. So another one where it might not give us clarity this week, but we'll look for a break of that range, either above 33.75 or below 32.50. Euro pound holding a very nice channel as well. Near term, heading in some resistance. 618 has been catching even the spikes. Here's what it looks like in the 30-minute. So it's been holding this ascending ML formation off the lows pretty nicely. You saw that drop down here, just missed that channel support, and all this thing has done is a very clear opening range, weekly opening range just below resistance. So there's the 618. We'll use that as the opening range high. Opening range low is right here at the 72 handle. Boom. So on some of these positions, even though they haven't given us trades yet, the mere fact that you're setting up all these opening ranges gives us conviction for at least some sort of directional break, either early next week or into the close of this week. But the levels are pretty clear here. So Euro Pound, will be looking for a move there. Sterling Aussie, also another trade at support. Oh, we might have just missed a trigger there. Damn it. One of the ones I was waiting for. Okay. Just wanted to highlight here the support at this right here. This level actually represents the close that we made back here on the July rip. We gapped higher. We did fill the gap, but that was the close of that session, was a fresh yearly high. Nice pivot back here in November. And a 1618 off the high gives us a confluence support region here. We broke through it, quick recovery. Right now, the median line came right through it as well. Could get a little bounce here towards initial targets or just the upper median line parallel right now. Momentum, break through this trigger, testing as support. Very nice. Here's what it looks like on the near term. Did we get some divergence on that? Slight divergence. So a slightly lower low, a much clearer higher low, and a hold at 40. Put the trigger looking higher here for Sterling Oz, at least for a near-term rebound. And last but not least, Aussie Yen. I just wanted to touch on that slope that we've been following, especially on the near-term charts. Here's what the daily chart looks like. Resistance still is 88.64. Aussie Yen on the intraday. Looks like this. Here's another one we just missed. Gosh darn it. Here's the break of support. We're just going to write that we were on channel support to open up the session. Looking lower against 88.26. Remember, 88.65 is that major key resistance that we talked about. So the move lower here puts the focus on a basic retracement off the lows. One of the things I was looking at with this morning is that this slope, which is kind of the broader slope I was looking at, just using the low that we made earlier this week and last week's swing low, had the lower median line parallel holding the lows pretty nicely. Within the confines, if I just draw a basic ML off the highs and last week's swing low, it's the exact same slope. So the premise of this was to look for a reaction off that level. A break above here would put you right back at a focus at the 88.60 resistance level. A break to the downside focuses on this retracement now. All right, we'll go ahead and nullify this. We've already sailed through that low. Those would be the targets to be looking at near term for Euro Oz. Any questions on that? All right, and that's the entire run through of all the positions I've jumped in through. If there are no other questions here, we'll wrap things up. Keep in mind, guys, Jamie will be on board today at 1 p.m. for the midweek strategy webinar. Make sure you don't miss that. As always, stay a little nimble here as we head into the holiday weekend. Things are likely to get, or it's not the holiday weekend yet, but things are likely to remain low as far as volume is concerned and market participation. We're pretty much spent on data for the remainder of the week. Heading into next week, you do get some data out of the United States, which might be telling early on. With the GDP figures, the final revision for the third quarter GDP figures are expected next week for the UK on the 23rd, for the US on the 22nd. Interestingly enough, the third quarter GDP figures for the US are expected to be downwardly revised from 2.1% down to 1.9%. So typically these third revisions or second revisions aren't really major market movers unless there's an expected downtick, and there is. So expect bad data to be really concerning now, because now that we've finally had this first interest rate hike on the table, everyone's going to be looking for those expectations. And as it's set right now, the expectation that the Fed hit is basically more or less a hike every other rate decision, if we're going to attain where they expect interest rates to be by the end of 2016. That said, bad data here, and you'll start to see pressure on expectations for those hikes, which could start to hurt the dollar. So just keep that in mind as we go through with incoming US data. All right, guys, I'm going to wrap it up here. I wish everyone an awesome weekend. I will be back on Monday in the public webinars on Daily FX at 8:30 Eastern, and then Tuesday we'll be right back here on SB Trade Desk at 8:30 as well. Cheers.